Good morning. What's going on, guys? What's going on? Good morning, Will. Good morning, Keith. What's going on, everyone? New week. We got a little bit of a, Thanksgiving hangover going on right now. It's going to be a pretty crucial week, just to give you guys a heads up, but more so towards the end of the week as we have jobless claims and we also have job numbers that are going to be coming out for the month. As well, we have the non-farm payrolls for the month of November, so that is something to look forward to. So, a little bit of a early week pullback here that we are seeing. I do expect the markets to trend higher. My question is going to be, do we see the market try to make an attempt of a breakout here before those non-farm payrolls come out on Friday, or do we get that on the back end of the non-farm payrolls, in which more so we see a beautiful uptrend next week? That's pretty much the question mark right now that I'm also just trying to figure out. And also right now, it's of course, as I always say, trading the levels, right? We'll see what the levels take us. If the levels take us to beyond a resistance point, then we'll know that we'll have a breakout on our hand ahead of the job numbers. Otherwise, if that be the case, we end up trading within a particular range this week, and then we see that breakout take place next week. All right. But it is a beautiful pullback here so far to kick off the week. The other glaring weakness as well that I will touch basis on is also XLE this morning as well. That is something that's actually noticeable as well. So I'll get into what that chart looks like with XLE this morning as well. And then the other thing that I also noticed is a little bit of a pullback here off of XLF. The financials have actually been a major part of this rally that we've had thus far. And so that is a beautiful little rip that they've seen thus far. A little bit of a pullback that we're having this morning as well, but a little bit more insignificant is what I would say. So look to the financials. Let's see if we have any kind of relative strength out of the financials, despite whether Nasdaq continues to pretty much stay within this deep red territory. Watch to see if the financials kind of give us a little bit of that relief in terms of showing that relative strength that we could trade towards the upside. All right. So that's what I will say in terms of maybe things to keep an eye on. Otherwise, I'll get to some individual names. I think the most glaring thing this morning that stood out to me is the weakness with Apple, which I will get to that Apple chart here shortly. But that is pretty much the most glaring weakness I saw this morning out of the tech sector. So that is something to also pinpoint as well to give you guys the attention for that particular name. Good morning, Lobo. What's going on? I had a beautiful Thanksgiving. I was able to spend time with some family and friends. So beautiful time to relax, kind of in that recovery mode as well from that whole COVID and all that sickness stuff. So I'm feeling pretty refreshed to kick off the week here. I'm actually looking forward to pretty much getting back on the grind of doing what I do. So I'm gonna look to pretty much be making some money here this morning. Back to really trading more so as I'm more focused and not really clogged up by congestion. So, like I said, let's kind of kick off. I'm gonna jump right into the spy levels here, and let's actually get to spy, and then we'll get to some individual things, cover some individual tickers. All right. So first and foremost, to say here's what I'm looking at in terms of range. All right, and this is what, as we've been building, what's been a higher high, higher low, off of this overall little bear market rally that we've had that started since October 10th. What I'm gonna look for is either okay, we're gonna look to see for support test. And what do I say support test? Is that our bottom end of our range, as we should trade towards going into that non-farm payrolls to the end of the week, is testing down towards that 20 EMA. That would be the ideal continuation of this breakdown in which we would actually hit meaningful support, is retesting that weekly EMA on SPY down towards 391.10. That will more so be the bottom end of my range that we could trade going into the non-farm payrolls. Now, if I'm looking for the breakout here, and this is where we're looking to see those overhead levels that we're looking at, to look at 403, 405, and ultimately 408 for your upside targets on SPY, I'm going to need to see SPY break north over that 50-day EMA above 403.57. So right then and there, that gave you pretty much your range that we could potentially trade within going into non-farm payrolls here for the next given 4 days, because non-farm payrolls are going to be on Friday. So we could stay particularly within this range here until we get that non-farm payrolls, because we've seen that a number of times in which the market trades within a range until we have a known factor. In which case, that's when the trend is going to take place. All right. So 391 is the bottom end of this range I'm looking at. The top end of the range is 403.57. So we're gonna trade likely between that 20 EMA and that 50-day EMA is ideally what I'm looking at for the weekly here. All right. Now let's get into the micro levels, the pretty much your minuscule levels that you're looking at in terms of supports, looking for your bounces, and to pretty much trade off of. So first level of support that we're pretty much closing in on here is that I'm going to be watching for the downside is 397.71. Below that, then we're trading down to 394.13, and then that'll take us right down towards that 391. All right. So pretty much two intermediate levels is that 397 and 394 level is what I'm looking at. And then, of course, you do have that 100-day EMA that's just smacked right in the middle there at that 399.34. So I would watch to see if that 399.34 is going to get tested here right at the opening bell. Let's see if we get that little quick pop to the upside. Attempt to get a stronger reversal back to the upside off of this morning gap up. And then over 399.34, then that'll set us back towards testing our overhead resistance at that 50-day EMA at 403.57. That will be the top end of our range that we're looking at to test right out the gate if we can get a meaningful reversal and attempt to go green. Otherwise, we rejected 399.34 and we're likely trading right back down under that 397.71. That will take us down towards 394. All right. So that's pretty much as simple as I can say in terms of the levels, the broader levels, the bigger levels to pretty much take a look at and keep an eye on. But most importantly, look to see that top end of that range and the bottom end between trading that 20 EMA and that 50 EMA here off of the SPY weekly chart. All right. Now let's get into some individual things. One thing I wanted to get into real quickly before I get into tech, which Lobo, I saw you kind of pointed out a few names there, so I will get to a few of those in just a second. But I wanted to point out XLE here real quickly because normally when we see XLE kind of showing us weakness, we typically get strength in other area. In which case, we usually see the Qs, we see the Nasdaq, XLK, for that matter. The tech sector pretty much tends to rally, and that's not necessarily the case right now. We are seeing a broader market sell-off taking place entirely in pretty much all sectors right now. And so what I was actually looking at is a little bit of a diamond top type of action here that's taking place off of XLE. I call it more of a rooftop because you have the nice little V-shape top that is more so of a house. So a nice little rooftop formation that took place. We had the breakdown below the daily 20 EMA. Support that I'm going to be watching for on XLE here if we get continuation on this breakdown is toward 87.88. That is where I think that if we end up holding the 87.88, we're going to look for the reflexive bounce and look to trade this back up towards 89 as we're sitting right now, in which we'll see a little bit of a nice little attempt to recovery and test the pre-market highs or pre-market lows that we have right now. All right, so I'm going to look for that. Now the actionable play will be, okay, wait and see if we get down to 87.88. Look for the reversal to play it back up towards 89. Otherwise, we break below 87.88. I believe that we're looking at a much more larger degree breakdown, and ultimately that's going to send us right down towards this 85 mark. 85 point, actually, if 85.12 is what I'm looking at towards the downside here in terms of your next meaningful level support. All right, so below 87.88, you're looking at 85.12 is what I'm looking at for continuation off of that breakdown. Otherwise, if you get the bounce at 87.88, you're going to look to trade this back up towards 89, in which is going to make an attempt to recover. All right. So that's pretty much looking at XLE. I think that's one that was pretty much glaring in terms of that rooftop formation. It set it up beautifully for what was a nice gap down this morning. All right. Now let's get into pretty much your critical names here. Let's get into the three-headed monsters, particularly as we kind of just cover the bases here in terms of your rotations. Again, I mentioned it kicked off the live here, just mentioning the fact that Apple was the one that had the most glaring weakness this morning. I think the weekly actually kind of looks a little bit better in terms of levels, but resistance I actually had to the upside was breaking north over 150.21. That obviously was pretty much your glaring weakness in terms of your rejection points. We ended up breaking down below that. Now, your level of support that I'm watching here for the downside, if we get continuation off of this, and my first level to the downside is going to be 142.20 off of this weekly. That is sitting at your 100-day EMA off of the weekly chart here for Apple. So I would watch, okay, let's see if we get a nice little bounce with the broader market. Let's see if we make an attempt towards 147, towards a recovery. If we reject the 147, that might end up being your pretty much your ultimate risk to reward in terms of a short, whether it be for 10, 20% gains, whatever the case may be. But that should be tested on the initial attempt that is likely going to be a rejection. And we'll see exactly how much of rejection before we make continuation to the upside. Otherwise, you're looking for a breakdown. Watch for us to get continuation below that 144. That'll be a quick landslide into that support test at that 100-day EMA at 142.20. And if for whatever reason we see further weakness in Apple here below the 142, I have my major key level of support at 137. And that 137 to me is more so a more critical level. I'm more so in the favor that we'll likely see Apple trade at 137, regardless of the broader market here. Why do I say that? Is because that would actually be retesting what has been a rather key level of support to resistance. This is where we broke out dating back towards June of last year, and we made a bull rally straight up towards all-time highs. And then we also had a meaningful reversal on two different occasions. Most recently, dating towards November of this year, that we ended up having a beautiful little rally that took place off of that base of 137. And then prior to that was dating back towards June of this year as well. So 137 to me has been that magnet. If we see continuation, we see further weakness. We saw where we had Tesla actually breaking down and the broader market has actually rallied. I'm more in the camp that if the broader market even rallies or attempts to rally, it's more so than likely that we're going to see Apple start to act as a relative weakness. And we already see that it's actually justified, especially with everything going on China related. It's definitely warranted the fact that Apple should be the one lone name in tech that should end up showing us that relative weakness, regardless whether we get a broader market rally or not on the horizon. All right. So that's pretty much just key levels to point out in terms of Apple. Let's see what else there is to pretty much point out. A global Amazon shop Walmart cost retailers off of Black Friday Cyber Monday. I definitely agree. I was actually looking on Amazon for some Cyber Monday deals. I definitely agree with that. I actually want to see how the Walmart chart actually looked out from most of those. So, because Walmart definitely was one of the more beautiful charts. And if you actually see here off of the weekly, we actually had a beautiful weekly megaphone that's taking place here off of Walmart. Now, I was anticipating the pullback. This is pretty much where I had us pulling back. I had a little bit of a supply zone. We kind of overshot that supply zone just a bit. So I'm going to look for support here on Walmart. Right around this 151 half is where I'm looking at support. If we could start to build this supply level that I had previously as support, we look to test the bottom end of that supply, which is now going to get continuation above. Watch to see if you can get a dip by a 151 half, and then you get the continuation over last week's high, over that 153.37 for continuation to the upside, and then we'll start to make our headways towards 158 is the next meaningful actual PT that I have for Walmart. All right. So from 151 half, I would say you look to see if you can go out on some maybe some expiration at least 2 to 3 weeks out, and then ideally ballpark would say you take this out towards about 158 should be that next meaningful level. In which case now we're gonna start to flirt with that most recent high dating towards April 18th at 160.77. All right. So I do like Walmart here a lot. I would more so favor getting a dip by entry at 151 half, and I think you go long at that given point. All right. And of course, having a stop loss in place, I would likely say that stop loss is going to be right around 150 and a quarter. 150.26 is what I'm looking at for that stop loss. In which case, I would say be cautious. If you're looking at getting in at 151 half, you look to stop out right around that 150.26 I have as your next level of support below. All right. So that is a pretty beautiful one. I definitely agree that especially how the broader market's looking, if we get a little bit more of a meaningful pullback, the value type of play here in Walmart is definitely going to end up reaping benefits. All right. So that's a beautiful one to keep an eye on. The other one I'd be pretty much wanted to point out here, going back to our three-headed monsters with Apple now kicking it off second with Tesla. Tesla, I'm actually looking at the range that we've been trading in here at this, pretty much looking at last week's trading range more so. In which case, the bottom end of this range I'm looking at in terms of support test, if we get more of a rollover to the downside, I'm looking at 167.90. I would watch to see for that 167.90 if and when we break down below 176. Otherwise, if 176 holds, you trade this back up towards 184.13 and you look for continuation to the upside, in which case you're going to look for confirmation of a confirmed breakout to the upside above 187.54. And then my next level of PT is sitting up towards 197, in which case, if we trade above that 187 towards back toward which will be about a $10 move to 197, that would likely end up being a broader market rally that we're going to look at. So, but then the question raises the eyebrow again as I kicked off live. Do we trade within a range here until we get the non-farm payrolls, right? Or do we end up seeing a market rally take place into the non-farm payrolls? That's pretty much the bigger question mark right now. All right. So that's looking at Tesla, the key levels there. Let's also look at Microsoft as well. Microsoft has been one that it's actually been showing relative strength the past few weeks, rather, I want to say. But bigger level that I'm watching here off of the weekly for the upside breakout. I'm watching over that 20-day EMA over 249.78 and watch for confirmation of a larger degree move above 252.99, in which case that'll set you up to rally further into the 100-day EMA at 257.79. In terms of support levels on Microsoft, you're watching for us to retest 246.08 as a resistance here, as we're basically right there pre-market. Then look for your continuations and your confirmation of breakdowns below 244.02. Next level 242.10, and then ultimately 237.51 on continuation down. All right. So those are pretty much the three headed monsters I wanted to say. But again, the most glaring weakness, which one actually shows the most weakness to the downside here, the most relative weakness, you're watching Apple for that. All right, that's pretty much the rotation you're looking at in terms of that tech sector right now taking place. All right. By the way, good morning, AA. Good morning. Good morning. Otherwise, I don't think there's too much else that I want to pinpoint in terms of that. Obviously there's little individual names that we can look at, individual levels that we can look at, but from a broader perspective, I'm gonna actually look to see if we can get a little bit more of a breakdown here this morning, kind of getting back towards SPY. Ideally, I want to see if we can get that 397 test here, that 397.71, and I would love to see if we can get a continuation on this breakdown towards 394. That to me is actually going to be the level I'm going to look at to particularly go long here on the broader market. If we can get down to 394, I believe I'm likely gonna look to nibble on some spy calls at that 394 level. I don't believe we particularly get down as low as that 20-day EMA off of the weekly here on spy. Even though that's the bottom end of my range, I'm more in the camp that we should not necessarily pretty much end up breaking down below 394. If we also break down below 394, that's also going to end up breaking this little higher low type of basis that we've been building off of this entire bear market rally. So that is something to also keep in mind, given the fact that we've been making higher lows, particularly off of this entire bear market rally so far, below the 394 level, that's going to end up breaking this overall trend. Of course, I'm going to have a stop if I do end up getting in spy calls at 394, if we get down to that level for that matter. So that's what I'm going to watch for is at 394, but ultimately knowing that the bottom end of the range is at 391, that's where you say, okay, I'm going to look to scale in at one given point and then you start to pretty much add to your position. All right. So you get a starter, and then you start to pretty much scale in, knowing where the direction is and having a hard stop in which, okay, if I hit this level, I'm going to be out and I'm going to look for the next trade. All right. But that's pretty much just the game plan right now. Obviously, I need to see how this accelerates. Look to see at that point if we continue to accelerate to the downside. How is Apple looking? How is Tesla looking? Is there any relative strength within the tech sector to say that, okay, the market shouldn't actually uh, bleed more than it already has at that given point? All right. Hey, Disney, do you see a head and shoulders on the daily? Let's take a peep at it for you. Why not? Let's see what's going on with Disney. Head and shoulders off of the daily. All right, so let's get down to the daily. And you're saying head and shoulders. So what I would assume here, if you're looking at my chart and what you're potentially looking at, I'm just gonna kind of outline what you're potentially looking at, and I'm assuming this is the structure you're looking at, just so I kind of get an idea of what your image is. I assume this is the head and shoulders that you're looking at, and you can give me that confirmation, yes or no. Is this the structure that you're looking at, AA? I would assume this is particularly the head and shoulders that you're kind of referring to. But I will say my pushback here would be the fact that this is pretty much invalidated at this given point off of this head and shoulders. I do believe that is pretty much invalidating. Otherwise, you would have got continuation off of this breakdown here. Below that 90 mark, you would have had continuation. But at this given point, I do believe that the head and shoulders is invalidated. I would actually watch for price action above 101 half. Above 101.62 is what I'm looking at. So above 101.62, you're going to get a reversal and you should break this overall downtrend potentially. And then you're going to see continuation to the upside. Over 101.62, you look for confirmation of breakout above 103.87. And then that's going to set you up for a larger degree rally to take place, in which case that head and shoulders will be invalidated. All right. So that's what I would particularly say. Now, if you want the head and shoulders to particularly attempt to play out, which I believe is already invalidated, you're going to need price action below that 95 half mark, and then you're going to look for the gap fill to be completed below 94.68. That's ideally what I would say if you're looking for the bearish case scenario. But in my opinion, I believe that the head and shoulders is actually invalidated. You can make the case that maybe there's another head and shoulders in the making here potentially, in which case, if I actually draw it out in this case, see if I could pretty much just draw it out for you right here. If you're actually looking for a little bit more of a minuscule type of head and shoulders, that could be playing out from a little bit of a tilted aspect. This is where I would say is potentially a head and shoulders still could play out, in which case you would need to curl down right here. This is ideally where I would say your head and shoulders has some kind of validity to it. You have the left shoulder, you have a head. If you break down this little rally that you've had from the most recent low, and you break down below that 95 mark to curl over, that's where I would say is your head and shoulders could potentially play out. And you're going to look for this to basically break down below 93, confirm below 93, and that'll be your curl over for that right shoulder to play out into the downside for that head and shoulders. Otherwise, if you're looking for that larger degree head and shoulders dating back towards what is this? This left shoulder started from May, the end of May. I believe that head and shoulders is already invalidated. Would be my assumption here. All right. So I think that you have the possibility for a smaller degree, little head and shoulders here off of the daily. But I would look to say more so if you're looking for the short opportunity, look below look below 95.50, below 90 that 95 half. You look for that short attempt and look for the gap fill at the very least, and watch to take profits at 93. And then below 93, you have your runners for continuation off of the curl down on the right shoulder, and look for a new bear market low here off of Disney. All right. But besides that, I will keep the live up here for you guys for so you can see my levels like I've been pretty much repeating here for the past few minutes. But that way you can see how that plays out in real time here. But I will leave that up for the next few minutes, next 15 minutes or so for the opening range to pretty much establish. Any questions, just drop it in the comments. By the way, Annette, Snow has earnings. Do you think their downtrend will continue? Let me take a quick peep at it real quick. Let's see what's going on with her real quick. Oh, that's a tough one. That is definitely a tough one. Let me see out to the weekly how this looks real quick. That is not a good looking chart if I'm being completely honest with you. I would look to see how this tests down towards 137. Ideally, 137 is your major support here on Snow off of the weekly. If this can hold 137 going into earnings, I would probably say, and I'm assuming that you're looking to play kind of a lotto for their earnings on Snow. If you, as long as you hold 137, I would pretty much say go for it in terms of playing a earnings lotto. Obviously, you keep those earnings lottos very small, in which they do not impact your portfolio funds. But as long as 137 holds, I believe this has merit in terms of a reversal. Otherwise, if it doesn't hold 137 going into earnings, you're likely flirting with potentially a breakdown and continuation below 123 half. This is likely going to end up making a new all-time low. All right, and that's pretty much what I would mention about that. Kim SRPT, isn't that therapeutic pharmaceuticals? Therapeutic therapeutics. Uh, so a nice little consolidation that you had. I will say a nice little gap up. In terms of resistance that I'll be watching here for SRPT, I'll be watching 136. You should get continuation up towards 136 is what I'm looking at for your overhead supply. So I would watch for that as long as this particularly holds that 121 half. 121 half should be your support. As long as 121 half holds here, I do believe this trades up towards 136 is my next level of meaningful resistance, in which case I would look to take profits. All right. So 121 half is your support. Look to see if you can get an attempted buy dip there or dip buy potentially. And then you trade that up to 136. The only given factor I would say is try to buy yourself some time. Particularly, don't try to go and force it on a weekly expiration here, or same week expiration for that matter. I would say look to at least get yourself some decent time on that. All right. Otherwise, like I said, I'll leave the live up, guys. I will wrap up this little morning outlook here. So far, watch to see. I pretty much going as I kind of expected here, a little bit more of an attempted recovery. Let's see how this attempted recovery here off the markets, how far does it take us to the upside, or do we get a rejection and we go right back down? That's going to be your key in terms to watch here. But I will put up SPY, and that way you can see my levels pretty much play out in real time here. All right. But other than that, you guys have a great training day. Let's kick it off on the right foot, and I will see you guys later.